So if you've been on YouTube the past 6-7 months and looking up anything in finance, you've been seeing
stocks are down about 800 points or so in terms of the Dow.
Stocks are down, inflation is up.
This could be the worst news for us all.
every single video is about the market is crashing, the bubble pop, real estate market's over, etc., etc., etc. I believe the real market crash just started, and over the next 6 months, it's about to get a whole lot worse. In this video, I'm gonna list out 5 reasons exactly why it's happening, what you need to pay attention to, and what you can do to make money in these times right now.
Do I pay off this debt or the things that I need to actually live?
So let's get right into it. The number one reason why the market just took a turn is because Jay Powell, Fed Chair Jay Powell, literally just said at their meeting last week, they are not letting their foot off the gas until inflation is 2%.
Really, what lengths the Fed is going to go to at this point?
Well, they're going to raise rates. It's going to be even more aggressive and raise rates by 0.75 percentage point. I don't think they'll do that. I think they've got, but they're going to, put out a strong statement.
The GDP is going down. Even the head of the Federal Reserve says a recession is
certainly a possibility.
What does that mean? They will keep raising rates over and over and over 50, 75 basis points until inflation starts to come down. We might have peaked in inflation, but we're still nowhere near that 2% mark that Jay Powell needs to see in order to deem the market in a healthy state again. So that is a lot of pressure from the Fed. They don't care, and he said, I don't care if I send this economy into a recession, we need inflation back down to 2%.
Requires using our tools forcefully to bring demand and supply into better balance. They will also bring some pain to households and businesses.
What does that mean? Housing is still on fire. It's still really expensive to rent in a lot of places in America. Oil and gas prices at the pump are still really expensive, and food prices are still high. So the Fed's number one goal is to bring down inflation, and like I said, they are willing to do anything to get it back down to 2%. So that is a very bad thing for stocks and the real estate market in general. And that's just a really bad thing for the stock market and real estate in general. The second reason I'm gonna show you on my computer right now. So stocks recently over the past few months have made a pretty decent run and ran about 15% to the north side up, right? And you can see on this chart, this is the triple Q, which is basically the NASDAQ. And you can see since last year, November, when we kind of peaked, we've been on a steady downward trend over and over and over until we are here in September. So you can see we bottomed right here in June and we had a pretty nice rally that I just mentioned, but you can see we failed to break out and continue to go higher. And we basically hit the brakes really, really hard right here. And you can see we've been riding this trend line all the way down. So I think we come back to the prior lows and potentially break those lows. There's a very good chance we could break those lows and go much lower. But the overall stock market, you can see right here, it's still on a downward trend. Once you're in a downward trend and there's no signs of breaking out of that trend, you can stay in that downward trend for another 6, 7, 8, 12, 15 months until you start seeing better sentiment in the entire market and giving it a reason to break out of this range. But as you can see, we clearly hit resistance right at this trend line and we're going back down for sure. I think at least and gonna retest these lows, if not go lower. So stocks are still in a downward trend. They haven't moved sideways. They haven't broken to the upside. So we're still on the way down for the next few months. The next reason the market is still crashing is because we haven't seen any sort of positive movement between Russia and Ukraine. If anything, it's just gotten worse. And all that is doing is putting pressure on the global economy for oil, gas prices, and a whole bunch of other stuff that's just happening in Europe that could be affecting the United States. We have to produce more oil. We have to bring out oil from reserves. So it's a big cluster fadoodle. And long story short, if there's no positive movement there, we're not gonna see any sort of economic recovery here in the United States. The second they say, hey, the war's over, our market's gonna skyrocket. But there's literally has been no signs of anything or any forward progress. If anything, it's getting worse. More people are dying. Russia's being more of a dick and Putin needs to die. So that's what's happening there. Russia is just Next, here in the United States, real estate has come to a screeching halt. Mortgage demand is down by 30-40%. Home sales have declined tremendously. Inventory on market is now up to 4 to 6 months in certain areas where in the pandemic we're at half a month to a month and a half. So people have stopped buying homes. Interest rates have gone through the roof, making the monthly payment so much more expensive, where if you wanted to buy a $500,000 home, you're now paying $1,000 to $1,200 more for that same home just a few months later. So I've been looking at my local real estate market. I'm a real estate investor, and I've seen so many deals sitting on the market for 120, 130, 180 days, where you put the deal on the market and you have 5, 6 full price offers and 4 or 5 overpriced offers. That has ceased to exist. That is not happening anymore. Houses are not moving as fast. What has happened though is rents have still stayed extremely expensive, and the housing prices have not adjusted for the higher interest rates. So we're kind of in like this stagnant period where sellers are still expecting a premium for their house and buyers are not willing to pay it. What does that do? It leaves more inventory on the market, slowing the real estate market down. So eventually real estate prices are gonna have to adjust downwards, I think by 10, 20, 30%, depending on what market you're in. Like South Florida might be different than Wisconsin or Connecticut, things like that. But generally things have slowed down tremendously, and they're not gonna get better anytime soon. The market is just gonna continue to correct itself. As more inventory goes up, demand goes down, or demand can waver and stay the same, but prices need to adjust accordingly. So that's gonna affect the overall market. Now look, if you wanna know how I'm making money in this market right here, go watch this video right here. I tell you exactly what my plan is to do with this stock market over the next few weeks to a few months, and you'll make a lot of money. See you guys on the next one. Peace.